Hey, what's going on, YouTube? Welcome back. Today is Thursday and the first day of the week and the month that ended up being a considerable profit. So finally feel like I'm getting back into the groove of things. So let's get right into it. The biggest winner for me is in gold. Actually, I got picked up in gold last night, and here's the thing. Um, I keep making the same mistake with gold in that I'm not trading the highest volume month. I assume because when I type in gold and I want to go to the micros, and I assume incorrectly that because the August month rolled over, the volume died off, that we're in October, and that's incorrect because the highest volume month is actually in December. And so this is the aspect of futures trading that I'm still getting used to, and it's not that big a deal. Just like I made a considerable amount of profit on gold for the August contract last month, and then it got stopped out for profit, and so that was actually a pretty decent move. I actually caught like a lot of this kind of. I got stopped out somewhere when it was doing this choppy thing, and I made this, and I did the same thing again in gold uh, for for August as I did for October, or maybe I'm saying that backwards. But anyway, my point is, if I bring up a new tab here, and I go to barchart.com, my caps lock is on, and we go to futures. You'll see that gold is December. That's the contract to trade, and they're like it's way more volume than the December. I mean the October contract, and it's something that I have to start paying attention to because right now it's not that big a deal because there's enough volume for it to still keep me in the trade. But I have to get out of this contract, get out of this trade sooner rather than later now because the volume is going to start dwindling rather quickly, um, and especially for me, it's not like I'm holding gold for day trades. I'm holding gold for swing trades, and so this is not really a viable swing trade anymore. So knowing that, well, after I found that out today, I actually added the December contract to my list, and I took a shot, and you can see that I missed. It wasn't really my shot. It wasn't really my idea. I didn't. It wasn't the entry that I would have taken. It was the entry that my one of my mentors, one of the traders that I follow. It was his entry all the way down onto like a 5 minute zone. You can kind of tell. Where was it? Ah, so this was actually a loser, and I'll tell you. And then I'll just once I'm done explaining this, I'll get back to the other trades that I took. Um, so we were taking a shot at. I'm not sure what we were exactly taking a shot at because it wasn't super clear to me because I think we were looking at this drop base and then rally this kind of situation over here. We were looking at either I think we were looking at this and we were just wrong. 4 points, so it's like $44, maybe 45, $46 worth of risk because it's $1 a tick here, and it's not wrong. Eventually, it went back up and recovered, but really that was a little bit more of an aggressive move. But like again, I respect his opinion and authority, so I just took that trade, and it was wrong. I would have looked at something down here closer to the 50. So I'm not saying I'm better than him or I'm right, he's wrong, and see, like I told you so or anything like that. Absolutely not. I'm taking his trades because I respect that he is better than me. but there are times when uh, like the confidence in his style is somewhat starting to I'm starting to realize that maybe that's not my style of trading, especially because he is more of a day trader and he takes profit like um, actually no, he does set up swing trades as well. I take that back, but this one wasn't meant to be that. This one was to meant this one was meant to kind of catch the bottom, and which I look for here, and I look to do that. I don't really look at zones as much as I look at what the price is and what the psychological number is, because if you ask me, um, institutions are still driven by people, as much as they are driven by like algorithms and everything like that. So and humans are inputting data into the algorithms as well. So psychologically, there's something to be said about strong whole numbers. So I would ideally want to pick up on the 50. But given what was happening, I was like, okay, I'm gonna front run it a little bit, and I'm gonna take the next dime, which is the 60. It's not as strong of a price as a 50, but it's a whole number, and I give myself that $100 cushion, right? Sometimes anywhere from 50, 100, maybe maximum $125 cushion for a contract here, and that's what I was looking for. Did not work. I actually did the same thing, similar thing, where this is the area I took on the October contract, that I should have taken on the December contract. But right now, my risk reward ratio is virtually the same, except that I have a shorter time limit, and the clock is ticking more for my October contract. Whereas if I took the December contract, I'd be more confident in holding it for longer and just really riding it up. I want this to go all the way up to like 2100. But it's the same exact candle structure that I got in at. If I bring this up here, same candle structure that I got in over here. Oh no, excuse me, over here. Wait. No, yeah, it was over here. This candle structure on the okay. This, come on, stick. Okay. This candle structure on the October is right in front of the small quarter where I like to take the 225, but if I see something this strong in front of the 225, I'm going to take that. So it was something similar, kind of a similar kind of thinking here. This was but this obviously happened at the 240. So I might have actually taken the 250 if I was looking at the contract, but I would have placed the stop. I would have been very confident that it would not break below 237, whatever the bottom of this is, right? And if it did break that, I would have had my eye on the 225, which is right here, right? This structure. So I use a combination of quarters and zones to for my entries and my targets, because those are the highest probability. At least that's how I've been trained. So for this one, I didn't actually take it. I took the I don't really see either one. It's just like kind of an aggressive move where I don't really have either one of those things really going for me, except a strong trend. Although you do see a little bit of divergence. I don't know. I'm very iffy. I'm very like iffy about this. I'm not super confident. A lot of things right now I'm just not very super confident about. Let's move on to a trade where I actually took profit on, which was the Nasdaq is really where I took a bunch of profit. And I probably could have stayed in for a little bit more, but I ended up not doing that. I ended up setting a target because it was already a 4-to-1. So I had an entry here. That was yesterday. Never mind. I took a shot here at the 11,075, and I took it for 100 points. to 11,175. That's really where the majority of my $200 came from. I could have taken it up here. I might actually take the I missed out on this little move here, but I might take another shot at this if it continues to move. So the thing is, gold is such a expensive contract that I ended up taking more using up more margin than I wanted. So I wanted to stack contracts, but I couldn't, right? So I was like, so that was really annoying to me. Um, so the Nasdaq was on a tear, and I was like, I was thinking about whether I should take profit here or here, just to like give myself more room for uh, for for margin, but whatever. I mean, I'll just take the win, I guess. Not can't complain when I'm finally profitable. I can't really complain. um, but it is not my primary strategy. It's not my favorable strategy. Like my strategy is to take a contract at each of the green lines and start stacking, right? Same thing with the Dow, similar kind of movement. It broke above to new highs. Um, I might start taking the uh, bullish positions on the Dow because it's cheaper than the Nasdaq and easier to scale. But the Nasdaq yesterday was where it was actually trading around the green lines, a little bit more stable. Whereas you can see with the Dow, I actually had a position on the Dow but got stopped out because you can see right here, and this one was a loss because I had an entry here. So I had a long here and then took profit, and then I took another long here, and I didn't take profit because this one I wanted to really just kind of let it ride, and ultimately it would have worked, except it was the wrong place to take it. I should have taken it either down here or down here, and it's just one of those things where I'm like, I have the right idea. I think you guys are starting to see it, right? Taking these quarters. This looks like it might have stopped me out, but it actually would have saved me by like one or two ticks. This the low here, if you check this out, the low is at 5,927, 26,927. It never actually touched 26,925, right? Even though the candle looks really damn close, it looks like it touched it. It actually didn't by two ticks, right? By 2 points, it would have kept me in if I took the 7,000. Right, so there's a little bit of a like I'm facing a little bit of an issue where like I'm not as disciplined as I want to be, and then I look at some of these things and it's like a coulda, woulda, shoulda type of regret that settles in. But I definitely want to take the 27,000. I'm interested in taking the 27,250. Right, it's a big quarter. I'm definitely interested in that. The Nasdaq is kind of the same situation here, but I don't know. I don't know. I might take a shot at. I usually don't want to take a shot at both because of because they're so correlated. So if one goes up, it's kind of like you're already stacking contracts by taking some like one position in the Nasdaq and one position in the Dow because they're so closely correlated that you might as well be taking all Nasdaq or all Dow. You're kind of I guess you're not really hedging. You're kind of just I don't know what you want to call it, like diversifying. I don't know what you want to call it, but they're so correlated that it's not exactly the best idea to take both in the same direction. I'm kind of doing the same thing right now with the Australian dollar, which I got picked up on yesterday. Just real quick, I missed the euro entry by one tick. By one tick, I had it on the green line, and once I saw that I missed it this morning, I moved it up. I was like, oh come on, like there's this you can see like there's the fact that you get so close to these is that and you just get picked up. Like if I had one tick above or even 5 ticks, I usually give myself like a 5 pip buffer for currencies sometimes, and I'll take the 30 instead of the 25, or like the 80 instead of the 75. just to give myself that buffer, because I want to be in more than I'm out, especially at those prices. You can see just came and just bounced back up really, really strong. Textbook, like no danger at all. Once of it coming back to stop me out once it bounced, and it went all the way up to the next the next big dime, right, which is the 900, right, uh, the even 100 number, right? So it would, if you wanted this is a nice little day trade right here if you wanted that. But I missed it by one tick, so I'm like, oh, okay, I like to keep, I like to be consistent, and my habit is to take the trades at the lines. But like, it's times like this, like I should have been looking at this, and I didn't. On the hourly here, this structure here is right. I did a good job of it on the gold, but I didn't do a good job of it on the euro. I just completely missed it. Like this structure right here, bam. There is a little bit of an issue with this particular structure, actually, because this wick goes down below. Let's hide this. This wick does go down below the middle basing candle. So I've been told like that kind of ruins it a little bit, but technically it still works. I've seen this kind of thing work still. If you're gonna take it, usually I've been told, like, if you're gonna look at that, then you got to look at the full range from the top of this to the bottom of this. That's your zone, right? That's your big zone, and that increases your risk, right? Because I have to make a bigger stop. Although for me, this is a 23 point stop. I do a minimum of 25 to 30 on these currencies anyway, so for me it's not that big a deal. But not everybody trades like that. Not everybody trades with a fixed risk in terms of a dollar amount. A lot of people trade like way more dynamically, and a lot of people like to be like, oh, okay, if my risk is this small because the technical analysis says so, then what kind of a risk reward ratio can I get based on this? And I just don't do that. I feel like, like for me, it's ultimately about dollars and cents. So for me, the risk ultimately comes down to how many dollars am I risking, and it's just a different philosophy. So, but I understand it, and I respect it, and I understand why I didn't get picked up here. Even though just one tick, you couldn't give me just one. But like maybe it. Honestly, at a different broker, I might have gotten picked up. So this is the trade station price. Sometimes the spread will vary broker to broker, and I don't know how tight the spreads are and how friendly they are. But like, this is a deal-breaking type of situation for some people. Some really, really picky scalpers will look at situations like this, examples like this, and be like, I don't know, I would want to check the spread. For me, I'm not that big a deal. Like, I'm a little bit more loose and a little bit more, you can argue, a little bit more sloppy, because I'm looking for bigger moves, right? A lot of people are they only like 25 pips or ticks is like as much of a profit as that's their profit zone, not their risk zone, right? So I'm just like, I don't really get that. Like, you must be trading such small increments of time for that to work. I was trained a different way. I was trained to. I come from like the institutional world. I come from the hedge fund world, where we look at the longer term horizon. And for me, I'm being extra aggressive by looking at 15 minutes or even an hourly chart, just to find like different areas. Honestly, I don't even need to look at 15 minutes or even hourly charts. That's just for detail. If the price, I could do this on a daily chart and be like, oh, okay, this broke above, pick me up on when I come back down to this price, and without having to necessarily see more candle structure there. So that's just me. So on the Aussie dollar, I got picked up, textbook pickup, right? Let's see, what was the so I'm pointing at my screen, like you can see my finger. So you can see right here, the low was exactly to the tech, 71.75, which is exactly what I wanted. I wish I had it on the euro though, because I'm a little bit more bullish on the euro than the Australian dollar. But whatever, same thing, because I'm bearish on the dollar itself. I'm I'm like saying like, hey, dollar keep getting weaker, keep getting weaker. That's fine. Long term, that's going to be a problem, but short term, but for my trading, it's actually going to work in my favor. Because I've hit oh, I guess I actually I have two contracts working for me here. I was gonna take one off at the 250, but that was a day order. I thought that we would get there. It didn't. Not a big deal. I'm gonna have to add that again when the market reopens. I actually screwed up the pound entry as well by not. You see here that yesterday I could have easily gotten picked up on this, but I put my entry at the 3,000. And there was so much room. There's just so much room that it would have to come back to retrace in order to pick that up again. That was just my bad. So like you can actually in a way looking at the daily charts to do the exact same kind of strategy as what I'm talking about might actually simplify things because there's less noise, right? Each candle is just like what happened for the day, and so like maybe I will just start sharing with you like just what happened in this day with respect to the previous days, because what I end up trading is actually a lot more. I'm making more money on like things like gold and things like currencies, like not like the equity markets, which has been a little bit more choppy. Um, you can see like there's a lot more lines here, so that might be a little bit distracting. But you can see like the Nasdaq, for example. Last week, look at last Friday. Look at how much wicking action there was. It was just on a tear. It chopped up a lot of people, myself included. Today or this past week has been a little bit more stable, a little bit more bullish, right? I wish I had caught. I wish I had let my stop go all the way to the 250, but whatever. Like it's like I already grabbed 175 points out of that between yesterday and today. Not really gonna complain when when I have profit, But the strategy is the reason I'm kind of complaining is the strategy is to actually like scale into profits. That's really where the big money is made, right? Instead of like just nailing day trade after day trade after day trade. Like that's not that's harder. That's harder to do. It's sexier because you could brag about it better and people understand it better. Like, oh, I have like an 87% win rate. I'm like, that's really hard to achieve. I don't. As a beginner, I am very aware that my win rate, in order to be that high, it's probably gonna take a really long time. And I'm like less than a year into this, and I'm finally starting to like get the hang of it. And I recognize that day trading isn't really my cup of tea unless I'm doing something that's like fixed rules, like the opening range daily trade, right? That's a day trade that I've been kind of like a little gun shy on. I actually took it this morning on the crude oil, and it stopped me out, but for a small loss because I reduced the candle was small. So I didn't need to take $125 risk there. I didn't need to take a full quarter. Um, but and that gas would have like I wish I had it because I just missed it. But yeah, so unless like the energy opening range and the equity opening range are just straight up day trades, like there's an opportunity you could take them every single day, and I've been back and forth. I'm like for a while you did see me take it every single day, and then for another like more recently you've been watching me be a little bit more discerning because the probabilities weren't there. I wanted to get better and learn more about like what's the nature of these, and and what I'm finding is that you just gotta give it a shot because like you never know. It's one of those things that really is kind of like a 50-50 coin flip gamble type of situation. So might as well take it as long as the risk reward is better than a 2-to-1. Then a 50-50 chance is it's fine. Like a 50-50 probability long term is totally fine. And I have the margin and the the know-how on how to execute them on the micro contracts. It's the only challenge, the only issue there is that sometimes like I get distracted with like the bigger move, and one can kind of go against the other. So that's a little bit of the challenge. So like it's reconciling the difference between the short move and the long move is something that is a primary focus of mine. You can see that I'm not talking about that many trades. You can see that I'm not holding at like 4, 5, 6 positions as I've done before. Gold is an expensive one, and it's been on a tear, and it's been giving. I'm up $300 something on this, and I'm okay with it. You can see that I've locked in. I've locked in about $200 worth guaranteed because that's where my stop is. I moved it up. So hopefully this continues. Like there's another bull trend. Hopefully I get to pick up on. Let's see here. I'm gonna keep an eye on the December contract, which is where I should be anyway. And I don't believe that I'm gonna get picked up on this. I might leave it. I might move it up to the 70 or the 75, which is where it's at right now. I'm not sure, right? But I got my eye on gold for sure because I'm super bullish on it. I think, and the reason I said before that I'm kind of being extra risky is because I'm in gold and Australia, right? Those are Australian dollar, and those are very closely correlated. So if this starts to go against me, it's gonna fall off a cliff all at once together. So that's why I'm especially careful. I want to take one contract off for the Australian dollar, and the gold, which is a little bit more profitable. It's a little bit more expensive, but it's a little bit more bullish. That's the one where I'm really going to keep that as a money maker. Nasdaq hitting all-time highs. I want to be on the bandwagon, but I was kind of forced out because of my own risk management. It was like a business decision to get out of it early. As much as I would have loved to ride that trend, I took gold as a priority over Nasdaq, and I might just do like the similar kind of moves with the Nasdaq, like on the Dow. I put up this tweezer plus John Wick strategy, which was honestly this morning, this area right here, that held, but obviously there was a little bit of a correction in the morning, bounce back. This area right here is kind of you can see the double tweezer. You can see like extra, like larger wicks here, and so the entry would have been to take this 27.25 again. But at the time, I was kind of already maxed out on margin, and at the time I was taking trades that my teacher, my mentor, was sharing with us. Some worked, some didn't, and so that's why, like on Wednesdays and Thursdays, that's usually what I do. I don't trade my own ideas. I trade his ideas because he's better than me. But this is one of those things. Like he doesn't do this kind of stuff at all. This is from someone else. The candlestick formation thing is from someone else, and the quarters thing is also from someone else. So I definitely am interested in that, but like that, I like that better because it's just simpler for me. But he's a little bit more technical, and he scrutinizes his entries and does like 2 to 3 times more analysis than everyone else. Although I think the probability is approximately. Actually, no. His win rate percentage-wise is actually way higher, but it's like it comes with volume. I'd rather have low volume, low win rate, but high maximum risk-reward ratio. So I'm looking for like 5 to 1, 6 to 1s, 10 to 1s, which is kind of what I got on my Euro trade from last month. Right? It's just easier to me to just be like, oh, I'm still bullish, add another contract. Oh, I'm still bullish, add another contract, rather than doing another round of analysis on other equities and other securities, right? So right now But doing that makes me miss opportunities, right? There's a balancing act that needs to happen. So anyway, that's it for today's vlog. I just wanted to give you an update on where my mind is at and where it was a profitable day, but really it's still technically a negative week, even though I am holding a significant profit. So it's like kind of like shaping up to be a little bit of a break-even kind of week, maybe a tiny profit. Hopefully, there's another big run tomorrow where I can double even what I made today. But we'll see. Tomorrow's the last day of the week. Hopefully, we finish strong because we're on a little bit of a comeback here. Until then, stay tuned for the next video from YouTube, and have a good night.